Well, hello everybody and welcome to another edition of the Forex Market Preview. My name is Jason Stapleton and things look a little bit different here. Let me grab my coffee. I've started to set up a little studio here at my house so that I can do a bunch of video production stuff, some of the things that I want to start doing for you guys, some new lessons, and also to be able to shoot some things. I have a nice little space here. I say nice little space. It's about 700 square feet or so here in my house that I've got dedicated for video production, specifically for training videos and fun stuff that we're going to do in order to try and increase your knowledge and increase your skill on this little thing called currency trading. Now, today, what we're going to talk about is we're going to talk a little bit about how to hop on board a trend, and I'm going to identify some of these, almost a breakout. How do you know when the market is really breaking out? How do you make that decision, and then how do you hop on board that trend and hopefully get somewhere where you can take advantage of that and buy it at the premium price and sell it for a nice profit. So let's switch on over here to the charts and let's have a look here at the Euro USD to start off with. Now, what we want to pay attention to here is what happened here most recently. If we look at the rally that existed here, market did really one of these numbers, kind of stair-stepped its way up, and then kind of put in a last little leg here where the market tried to get higher and then couldn't. And actually, if I come down in here, I don't have my crosshairs on, but I can go ahead and I can take the high water mark here. We see that the market initially broke out to the upside, and then we came back down, and if we go ahead and I'm going to delete this line here, and I'm going to draw in another line at the very low point. So initially the market rallied up to here, then we pulled back, we tested again, we pulled back, we tested again, then we came in, boom, tested the low point, and we break out to the upside. Now, I get a ton of questions about how do I know whether this is a false breakout or not. And guys, to my knowledge, and I mean, there could be something out there, but I've been doing this a long time. There is no way to know whether or not this is going to be an actual breakout or not. Well, it is a breakout, but there's no way to tell whether this is going to be a false breakout or the real breakout. However, when the market does something like this, where we get what ends up being a false breakout followed by another breakout in the opposite direction. So market goes breakout to the high side, breakout to the low side. There is a very high probability that this is the official breakout. This is the direction that the market is going to go in. Now, you can go back and find this time and time again historically, and I would advise all of you guys to do that, is to take this concept of, hey, if I get a breakout that's a false breakout followed by a second breakout in the opposite direction, how many times is this the trend direction? You're going to find that a high probability or a high percentage of the time, that's going to be the way that the market breaks out. Now, what can we do with this? Well, there's a couple of different trades that we can make here. Number one is we can sell as soon as, we can sell as soon as that market breaks into what we call a lower low, lower close. And in this case, if I'm looking at this being the previous lowest close, and then we get a lower low and a lower close, that signals a potential short entry. Now, that is the most aggressive entry. So, again, the benefit of this is that you're going to catch every major runner. So if this market came up, false breakout, then breaks out to the downside and you end up selling them, and the market just takes a nosedive, you're going to catch every bit of it. But again, it's a much more aggressive trade. A more conservative approach is to wait for the market to rally. So we look for the breakout, we wait for the retracement, and then we sell the retracement. Where are we going to sell? There's two different places you could potentially sell. You could sell the previous structure that exists back here. You guys see the shelf that the market was sitting on? Or you sell previous resistance. Two different areas. And again, when we start talking about this, and we're talking about conceptually how this should be done, there are many ways to do it right. And so there's not a right way to take this trade. There are a lot of ways to do it wrong, and the wrong ways that you would do this is taking the trade before you know where your stops are going to go, before you've analyzed the risk reward, before you've done the historical testing to find out whether or not, if you do this consistently, whether or not it's going to produce a profit or not, essentially whether or not you have an edge. But you can use one of these two methods, very, very simple method, for determining where you're going to set your limit orders to enter. And so, as the market presses back up, you can either sell here, as the market would actually be right here because we would sell based against the closes, the lowest close. So it would be either here around 32.53s or here around 32.90s. All right? Either way, euro dollar right now is a sell. Based on this strategy that I'm showing you, stops will need to go above 33.45. But we're going to find out over the course of this week just whether or not this particular trade is going to pay off for us, because we're looking for a short basically right now at 32.79s. And we're looking for this market to continue lower. All right? Next stop is going to be right down here. Okay? Basically where the market found this shelf. So we're going to have to get under that, and we're going to be looking for, boom, something down around here around 130.80s. Okay? So the expectation here is that this market will fall somewhere into probably go 131 with it just to be safe, because that's the even handle rather than getting right underneath that. So 130, we'll call it 131.02s. All right? And we'll look for 131.02s as this market continues to decline. Now we can trail our stop here. There's a lot of different ways that we can handle stop position. We can move stops to break even once we hit the previous lows, just to make sure that we don't get caught into a situation where the market puts in a double bottom here and then rallies. There's a lot of different ways that we can handle that. Too many to talk about here. That's something we would save for like an actual training course. But just for a hip pocket Forex market preview, this is a pretty good trade setup. A lot of different options that you have. Now let's move on. Take a look at the pound. The pound is set up something very similar. Okay? So in this case, the market has again rally here, rallied to here, then the market broke out to the downside. What are we looking for? We're looking for that retracement back up into previous structure support, which should now be resistance. Market hit that a little bit earlier in the last week at 153.10s. We're now sitting at basically 152.84s on the 4-hour chart. You've got a selling opportunity here. It's the exact same thing that we looked at in the euro, just a little different chart. And we'd be looking for the market to press down initially, of course, back down into previous structure support, and then potentially carrying on down into the next level, coming down in here around 150.50s. So we'll see whether or not this market can continue any lower, and whether we can get any type of downward movement against this. But definitely, we're showing dollar strength here after this relief rally that happened on Friday. So let's move over. Let's take a look at the same kind of setup happening here in Aussie. I just want to take a look at Aussie here. We've been watching the channel. Okay. Market's been in this nice channel here between the highs and the lows. I don't know if those of you who follow this probably remember us talking about this several weeks ago. Market now is broken out to the downside. So what we would be looking for is a rally back up into previous structure support, which should then become resistance right around 90.30s. And then we'd be looking for potentially a shorting opportunity there based on our ROE, or our rules of engagement. Last thing we'll look at today is Canada. Canada has a cipher pattern. For those of you pattern folks out there, really nice one setting up here. Markets come down in. We tapped the 120. We've rallied back up. We're looking for 152.28. Okay, 152.28, and this is a bearish cipher. So for those of you who are new, by the way, if you're new, thanks for coming. Appreciate that. Hope to see you again. Once we rally up into that 786, we're going to be looking for a shorting opportunity for the market to fall back. And again, taking a look at this, market went up, we've come down. Now we're looking for a rally back up into 152.29s, 28s, and then looking for that rollover. Stops have to go above the highs here. This would what we would call X. They have to go above X. And again, if this is new to you guys, if you're fairly new to trading, or if you're very new to patterns or structure analysis, just hang out for a couple of weeks, 2, 3, 4 weeks, coming back, watching the Forex market preview every week. It's going to start to click. It's going to start to make sense. And more importantly, we've got the Technical Trader Workshop that's coming at the end of September. September 30th, I believe, is the start date for that. And that's totally free. And it's a solid week of nothing but technical training to get you guys spun up on how to read charts, how to understand technical analysis, trading psychology, the importance of trading as a business, all that stuff included in that Technical Trader Workshop, totally free, doesn't cost you a penny. So make sure that you get in there for that as well. So today we've taken a look at a couple of different, basically trend continuations, essentially breakouts, and how we're going to play those breakouts. We've taken a look at euro and pound, which have those setting up right now and are essentially sells at the open. We also looked at the Aussie, which could potentially present us with a trend continuation trade here over the next week or so. And of course, we have Canada and the cipher pattern as well. So a lot of different stuff working. We could get into a whole lot more, but I'll save that for the syndicate. Those of you guys who are syndicate members, we're getting 3 to 7 trades a day that are coming through over the syndicate chat software, and that is just going phenomenally well. We're getting huge responses from that. I got an email, or actually Akil got an email. He shared it with me. Guy said, "Yeah, I've made 500, almost 600 pips." He said, just off the syndicate trades over the last 2 weeks. He said, "I'm just super excited about it," or maybe it was the last month. He said, "I'm super excited about it, and I'm just couldn't be more pleased." And at $20 a month, I mean, how can you go wrong with that? But again, disclaimers are always there. Results not typical. Highly likely that you're going to lose all your money no matter what you do, because this is a dangerous game, and it's even more dangerous if you don't know what you're doing. So anyway, that's going to do it for this week. Again, leave me a little note on if you're watching this on YouTube, or if you wouldn't mind. This is a YouTube video. If you wouldn't mind going to the YouTube page and just leaving me a comment and telling me what you think of the show, telling me what I could do better, and just pat my back. Do me a favor, hit me with a solid, and don't forget to like the video as well, and subscribe to the YouTube page. So that being said, I'll talk to you guys. I'll see some of you in the syndicate. For the rest of you guys, I'll see you back next week. Until then, good luck and good trading. I'll talk to you soon.